So let's get into our last roundtable discussion, digitalization and the incentive to share. I apologize, we'll go a little bit over, but I'm sure most folks probably have till the top of the hour anyway. But Nick, again, was leading this discussion around how might we reward high-performing contractors with reduced insurance rates in ways that measure new key performance indicators consistently across each contractor, so that the combination of savings potential and low barrier to entry outweigh any historical concerns. Very, very nuanced discussion, one that took us a while to kind of wrap our heads around. So I'll kick it over to you, Nick, and let us know if you made any headway in the incentive structure between insurance and us contractors submitting to insurance providers.
Yeah, I'll say some.
Okay, not nothing.
Yeah, I'll try to keep it kind of quick here, but you know, obviously a very involved conversation, and one of the first times I think that we've actually had it with everyone else in the room. So good discussion to have, but started off a little bit with Chris talking about how, okay, right now, Aon, what they're doing with SDI involves kind of those really top flight GCs who have all their stuff together and are able to compile this data to kind of improve their rates and have this increased profile to even get SDI in the first place, which is kind of this newer thing, let's say, within the last 10, 20 years. We brought that discussion forward to say, well, okay, when we're talking about these buckets of data that they're looking at, Thinova was able to identify for us, okay, well, they're looking at exposure data with respect to what type of projects the clients are building, policy data, different claims that they made, but then also this last bucket, which is what they might call mitigation data. So any technology that's been implemented on site, IoT, things like that, that are working against some of the claims that they see historically, or, you know, issues or things that are root causes for issues that they've seen. What we kind of found going through that is, okay, well, a lot of that stuff is provided by the trades, and that discussion of what's in it for me. So how do we incentivize them to really contribute to this? Is there an opportunity for us to bring that benefit to them in a more concrete way than saying, like, okay, you can increase your efficiency and your operations, you know, it's going to positively affect your bottom line. It's like, how do we give them a little bit more of a so what? Which is what we're hung up on, you know, for a little bit, I think. Definitely talked to the idea of, well, yeah, maybe we could use this kind of from a top-down type of situation where the owner is driving this to say, okay, yes, there will be some beneficial rates from increasing this transparency to all of the kinds of claims that you're having, and really opening up the floodgates between the levels of trade to GC to owner. But I think it was Alec who had the quote was, what was it? If you're going to be naked, you better be buff. So it was one of those things where
give Chris credit for that. Give Chris credit.
Chris. That's Chris. Sorry. But anyway, there is this hesitation that we're going to have to overcome with, like, yes, there may be situations where creating greater visibility around everything that happens is, you know, could have a negative effect, or your rate could go up in one, you know, short way. But the idea being that having this additional learning and this greater vision of all that is going on with respect to projects, and then kind of taking that look in aggregate, is really going to help lower those premiums over time. So it's obviously there's a lot more to it, but that was ultimately where we sort of landed, and kind of had a little bit of discussion at the very end with respect to, you know, there does need to be some sort of case study. Maybe some people need to take a leap of faith on these really highly transparent projects. And Dixon brought up an example. I think it was, you said, the University of Texas that was doing this type of a situation.
Yeah, that's correct. The Construction Industry Institute looking at a thing called OS2, a neighborhood where they have common data elements and transparency across the entire platform.
Does that mean we have to invite Pete Dumont on again next time?
Well, yeah, well, Kurt's a member of Construction Progress Coalition. Kurt's leading it. So
yeah, that's good. That's great. That's all coming full circle.
Yeah. So that was kind of where the discussion left off. I'm sure there's a lot more to go, though.
Awesome. Well, thank you so much, Nick. And yeah, that's it's so funny that the financial discussion ends up being the more challenging motivational discussion. It seems like it would be a no-brainer.
Go figure. You always give those ones to me.
Hey, I mean, yeah, what doesn't kill you only makes you stronger, right?
So my name is Nick Monica. I'm a product manager with Milwaukee Tool on the One Key team. So our connected tools and our asset management platform. So it might seem interesting that I'm here moderating this topic, but the good thing is that all I have to do is just ask some good questions and get the discussion going. So as far as my background here, like I said, I'm with Milwaukee Tool, and I was kind of leading the discussion that we had back in February on topic 3.3, which I'll get to in a second here. But here now we've kind of realized in the months since February, since that discussion, that okay, there's a lot of synergies here potentially between topic 3.3, topic 3.2, which was about a lot of pre-qualification with subcontractors, and that discussion kind of brought in Aon and led it into this new direction about digitalization. So this, wonderful CDC format that we have here is how might we reward high-performing contractors with reduced insurance rates in ways that measure new key performance indicators consistently across each contractor, so that the combination of savings potential and low barrier to entry outweigh any historical concerns. So really what we're trying to do here is improve the fidelity of data that we have about contractors and really allow them to sort of help themselves in this insurance and in this surety process here. So as far as where I'm coming from with topic 3.3, we started this as, so my perspective coming into this is with that connected tools side of things. So we thought about field sources of data and inputs into these different business processes that we have. So if we have, tools in the field that are able to have different telemetry data about performance, about progress, how do we feed that into a system such as, pay apps, for example? So that's really where we started, was point of payment release, talking about redefining contracts to leverage the captured data inputs on a job site for progress reporting to ultimately speed up that time to pay. It led into a much wider discussion about incentives at the CPC summit that we had, which ended up kind of turning into more of, okay, well, how do we increase the transparency around the impact of payment terms on a subcontractor, so that we can balance out the risk a little bit more and reduce this high burden of cash flow trouble that we see with subcontractors when they're into payment terms of 120 days or 90-day payment terms, things like that are pretty much standard. So again, trying to increase that transparency between systems to say, okay, well, how do we redefine these incentives a little bit to reduce those payment terms up front? Is it a situation where, we can show there are benefits to, increasing this cash flow for both owner and for sub, so that we can kind of reap that mutual benefit there. So we are here today with some of the shared perspectives. I know we're missing Satyam, but we do have Chris and Thanoba from Aon. So if you guys would like to introduce yourselves. Oh, hey, how are you?
Doing well. How are y'all?
Good. Okay, so now we have Satyam. We can kind of go through each person here. So Chris, why don't you start off, but just introducing yourself, your company a little bit, and what perspective you're bringing to the table today.
Yeah, thanks, Nick. So I do work at Aon. We're a large global broker. I specifically work in the construction and infrastructure group as the director of analytics for our North American construction infrastructure practice. And for the past 10 years, I've been trying to focusing on what data we can kind of use to leverage the decision-making process. So like from our GCs, from our subs, from our clients across the world, it's been kind of challenging to bring it all together because we're finding everything is so siloed, but it's been enlightening to kind of go back to the basics in the more recent years and figure out, okay, what exactly do we need? How do we come up with this idea of good project health? How can that relate to the insurance business, and how can we kind of have a win-win-win all around with everyone from the designers, every phase of the construction
This room obviously is small.
to the insurance companies as well.
Well, this room is warmer.
Dixon, I think we're getting some feedback from you.
A small deal there.
Dixon.
But
Nick,
this
I'm
gets
not
the
sure
more,
if you're able to mute.
Yeah, there we go.
Yep, I got it.
Yeah, so perfect. We're essentially going down the path of figuring out all the different data sources that we can kind of feed into this operating system of the built world. And I think we've made a lot of progress over the past few years, but it's still new to the industry. It's new to construction. It's new to insurance, and it's mixing a little bit of art with science. So happy to get into the discussion today.
Great, thank you, Chris. And Thanoba.
Yeah, hi everyone, I'm Thanoba. So I'm the data intelligence manager for our construction and infrastructure practice at Aon. So I've been with the construction practice for the past 5 years, initially working on the insurance broking and account management side, and then recently moved on to the data team to kind of work with Chris in building out our data and analytics practice and leveraging kind of the data that we have as a broker, and to, as Chris mentioned, kind of improve the decision-making abilities of our clients and how we can kind of incorporate technology into that as well. So I'm looking forward to kind of speaking about, both construction insurance and how we can incorporate technology into insurance and managing risk as well. So looking forward to it.
Thank you. And then Satya.
Awesome. Appreciate everyone making the time to be here. My name's Satyam. I think I know most of you, or at least spoken to once before this. I work for Document Crunch and lead their revenue operations, where we're really kind of, you could think of it as boots on the ground, where we're really helping implement that technology that gives these contractors a way to gather the insight that they need to make to support the decisions that we want them to be making overall based on moving the entire industry forward. And so really understanding the pain points that they go through. I think we talked a lot about that in the last session we had in February, about just some of the disparate data that's all over the place that they're not really looking at. So if we can get them to understand this data and see the value, I think we can reach what we're trying to accomplish here.
Cool, thank you all. I spoke about topic 3.3 that we discussed at the CPC summit back in February. So Satya was actually leading the group that was on 3.2, which is this sort of connected topic here, especially to what we're discussing today. So Satyam, if you'd like to kind of walk people through a little bit of, where you started and then where this left off back in February, I think that'd be good to help kind of ground the conversation here.
Certainly. And so this really started in order to gain an understanding of what some of the issues are today that everyone faces when it comes to pre-qual. As we broke that issue down, we realized that it really comes back to the fact that data is very siloed. Certain aspects of information that's needed for pre-qualification is also somewhat confidential, that you don't necessarily want to be openly accessible. And some of it has to be created and gathered manually on a case-by-case basis. As we mapped out the different systems, workflows, and stakeholders that were part of the process of gathering the data for pre-qual, we were able to, at a certain level, I don't think completely, identify a couple of areas where maybe we could streamline that solution to give, ourselves as an industry as a whole, the ability and, let's say, the leeway with resources to focus on some of the issues that we're talking about right now, because we're spending so much manual effort simply just getting what we need to get done to get through this process that we don't really think about what comes next and what the bigger picture is. The outcome was that by identifying a couple of these potential siloed areas of data and being able to understand who should be the owner of that is really what we need to figure out. And I think what is the main topic of conversation in order to, as I said, move what's actually happening on the ground to meeting the reality of the big picture that we're painting here. And so it is somewhat of a different conversation than when you think about really even what we're talking about in 3.3, because there is a very finite outcome that you're looking for. Whereas here we're trying to shape a new workflow and a new process that meets the needs of multiple stakeholders, right? We have the surety, the brokers, insurers, the contractors, the specialties. They all have different needs. And so I think the consensus was that we need to come up with a better path that either there's a centralized data source or we're building in the future that common data environment so that this information is more easily accessible.
Great, thank you. So I know that I think it was Dixon who was in that conversation with 3.2 as well. If you'd like to maybe introduce yourself and your perspective coming into this, I think that'd be helpful too.
Sure. Dixon Wright. I'm with USI Insurance Services. And yeah, we're constantly dealing with supporting sureties, supporting contractors in getting their surety credit. And inevitably, every surety has a contractor's questionnaire. And it'd be sure nice if they all had the same one, because they all ask the same questions. And our goal is to not only have the contractor's questionnaire available to any surety, but also any bank, any insurance company. And so it'd be great to have common data elements that we could use over and over again instead of recreating the wheel every time.
And Dixon, I know you were working and having a couple of meetings where I think you're the one who's made the most progress in sort of building some path forward. Love to get an understanding of how that's evolved since the last time we spoke in February.
Sure. You know, our deal is we don't want to try my advocacy, I say, it's a personal advocacy, is that nobody should tell anybody what to do. The idea is a meritocracy will allow the best products to come, and we want to promote innovation. So the common questionnaire is, instead of creating another one, is to rather start to leverage the ones that already exist. We've identified 4 of them. One is the SBA's 944. The other one is the federal government's 357. Another one is consensus stocks, and I think it's 220, and the AIA. Those 4 questionnaires are broadly used by a wide range of people. They're already institutionalized within trade associations. And so what we've been trying to do is get the data elements of each of those 4 contractors questionnaire into the government's data dictionary called XBRL, Extended Business Reporting Language. And that way, everybody knows those data elements are in the dictionary. And if somebody says, I can give you an AIA, or I want a consensus stock or a 357, you can do it. You can send it and receive it. It also allows you to create your own specific contractor's questionnaire, because you may not want those questions. But our goal is, if you pull from the same dictionary, that anybody can send and receive, because it's the dictionary that creates the apples to apples. And so the trade associations give us context, and the federal dictionary gives us the ability for data interoperability.
Common data environment.
So good to kind of have that, at least to give us a little bit of perspective as to where we are today. And obviously the conversation is pivoting a little bit with the perspective from Aon. So just to kind of kick things off a little bit in this new discussion that we're having here, as far as, you know, this discussion of how might we reward high-performing digital contractors with reduced insurance rates in ways that monitor key performance indicators and report them to contract insurers, so that the opportunity potential for sharing outweighs any historical perceptions of risk. So, Chris, would you mind giving us a little bit of a background on SDI? You know, your perspective here, the history, the purpose, some of the current state versus future outlook that we're looking at within this this area. And I can give you, you know, you can take over sharing the screen or anything if you have materials that you'd like to share for that.
Yeah, I can just talk about it, Nick. So if anyone's not familiar with SDI, you know, it's been around for decades now, but it really puts the GC in the driver's seat as far as leveraging their own best practices and operational benefits that they've been able to achieve. So typically, for a GC to qualify for SDI, they have to be on the more sophisticated side, because they're doing something to the best of their ability within the marketplace, right? So, you know, Dixon, like you said, there's a lot of great practices and procedures out there right now. No one really has to tell us what to do, but we need to see, okay, who's leveraging the best practices right now, and which one is going to win, basically. So SDI is a two-party insurance contract, unlike surety, where it's got three parties and specifically based on the balance sheet and the financial performance. But GCs are basically indemnified for costs associated with losses around defects, around schedules, insolvency, quality, and health and safety. And the reason I say the GCs in the driver's seat is because they have more skin in the game, as opposed to traditional surety insurance placements where if they win or they lose, the same thing happens with the insurance companies. So they actually are in control over the enrollment of who which subs they kind of bring on for projects, how they handle defaults, and also how they handle remedies to kind of get things off and running. So it's not typically the insurance companies telling them what to do, but they're leveraging their own best practices, which is why it's only really given to the more sophisticated contractors that have the experience and the scars, knowing how to solve that going forward. So, typically for a contractor to be underwritten on an SCI placement that's new, it could take 6 weeks to 6 months. It takes that much R&D for the carrier to understand, okay, this is what you're doing, this is what we're seeing as best in class, here's where you can improve. And it's primarily done and underwritten on operational best practices, pre-qualification, and also their spread of risk. So the benefits around this, it's owners are kind of willing to pay for it because they get the QAQC upgrade from having the more sophisticated players that have SDI on their projects. Lenders are also willing to provide improved financial terms for contractors that have SDI. And it's also a branding thing because, there aren't a lot of top sophisticated players in any market, and just having that kind of badge of honor knows that you kind of went through the school of hard knocks and you have solutions around that. And then you have continuing resource access to the SDI community as well. And it's about continuous improvement. So when you say like how things are going to move forward to benefit what's happening in the future, because SDI is a continuous improvement loop, learning from best practices and lessons learned, as we see defaults kind of happening, really the whole SDI community kind of learns from that because we're learning from the best practices as they happen going forward. So in the future, I do see a little bit more transparency around some of those best practices and pre-qualifications, QAQC, and almost like a community kind of learning from that going forward. So, you make one mistake, let's make sure it doesn't happen again. Or how can we continuously come up with this metric of what is project health, right? Because it's all really, really connected together, whether it's within the same country or within the same continent. If you have a sub that's defaulting or failing, if we have the data and insights into it with a single kind of data dictionary or definition around okay, what's going on across the entire board with no silos put up, then we can say, okay, with this subcontractor, you're affecting all of these other projects, all of these other GCs, whether it's in the same country or across the continent or across the world for that matter. So I think the increased level of transparency and being able to read and understand the data coming out from a consistent approach is going to really help the industry, but also rise all the boats because, with the rising tide, all the boats are going to rise with it. So.
Very good. Thanks, Chris. Appreciate that background. And I think, that's where we're all sort of looking for is that additional transparency and trying to understand, like you said, what is project health. And so Thanoba, coming from your background with the analytics team, as far as what you can take a look at today, like, obviously you can't reveal everything. There's some sort of, element of this that is trade secret maybe, but when looking at like some of those leading indicators, what are those data sources that you have access to today? Or what do you, I guess, what is current state when you are considering this element of project health? What are you looking at?
So I think as an insurance broker, we're kind of in a unique situation as we have data coming in from, all the different products our clients buy, as well as across all the markets. So we like to look at our data sources in kind of 4 themes. So the first one is the exposure data. So this comes down to what kind of projects are the clients building? So this could be the asset type, where is the project? located, the delivery model, the size, et cetera. So this is all information that we get from, applications and the underwriting information that the client provides to us. As what we're delivering is an insurance product, we look at the second pillar, or data source, from the policies itself. So this is the data coming from the markets. So this includes sort of what kind of limits are being purchased for what types of projects, the retentions, the rates, and the different coverages that are being offered across the different markets. The third theme that we kind of look at is claims. So this, again, comes from both the client and from the markets. And we like to look at the root cause of loss, kind of break it down to see what types of losses and how we can analyze that with the data that we obtain from, both sources. And then we like to look, so the fourth pillar that we're kind of working towards is the data that comes from the technology implemented on site. So what we're trying to do is see, which projects have what tech implemented, and can we see that, the claims were improved from having that tech implemented. So we like to call that the mitigation delta. So we're kind of trying to work towards connecting all four of those data sources, but ultimately it comes down to, what's available to us and where we can work with the client and with the markets in obtaining that information.
And I would say, to add on to that, just connecting those four themes, I don't think it's ever really been done before, because it's not an easy task, and it's going to take the industry to change, the insurance companies to change, the brokers to change. And once we have that kind of connect the dots between those four themes, then that's truly the foundation of a solid decision-making model tool.
Yeah, and a lot of it comes down to, even within the construction companies themselves, there's kind of a barrier between the field and the risk management side. So as a broker, we deal a lot with the risk advisor, the risk manager, and sometimes they aren't communicating with the field in terms of, you can get premium discounts if you're implementing tech, if you're mitigating risk. So it's a lot of education that needs to happen within the company itself, as well as from our end of what we can do for them as well.
And even for the actuaries to kind of catch up to what we're doing here, because if we have tech that's new, but underwriters typically use the past 10-20 years of experience or claims to underwrite, and that's how you get your rating basis, your limits, purchase your maximums and things like that. But now that we're saying, okay, we're fixing some of these issues so they're not going to happen again, you almost have to intuitively imagine, to take a leap of faith. Okay, this is going to help you, but it hasn't been around for 20 years. So how are we going to change the actuarial model to actually involve a little bit more thinking around, the creative side?
Yeah, and without without proving out the benefits of the tech, none of the stakeholders kind of want to take that leap of faith and be the first one to say, okay, the insurer won't be like, we will give you a premium discount, without kind of seeing that, their claims improved, or that tech, increasing productivity or mitigating risk. So it's kind of every stakeholder has to come in and kind of do their part to try to build out that framework from the inside out as well.
Chris, can I jump in?
Yeah, absolutely.
First time participating in a virtual. So Alec Thompson, one of the co-founders of a company called Riskcast, that is labor production and equipment tracking. But I come out of Skanska, so I'm familiar with Aon as a broker. I come out of Skanska Heavy Civil, where my last position, I was a subcontracts manager. So very near and dear to some of this. And then I was also business strategy at our corporate office in New York. So I'm curious, Chris, with what you just said, kind of following that, I had written down some notes. It's really interesting. A lot of what I'm hearing, I'm going, all right, this is great for the top 1%, as you were saying, the SDI, right? This is going to be the very sophisticated, it's the top 1%, maybe 10%. But that last point was, per one of my notes, what if a company completely went digital, right? The bigger companies can't do that. The larger GCs have barrier to do that within their own internal bureaucracy, right? So imagine if we want real disruption in an industry, what if that company that started yesterday went full digital from day one, and their GC, all their trades, everything's transparent? How would they even begin to benefit from? They clearly can give you better information, but how in the world does that, do they get do they get benefit from it? Because I think that's the model we would want to proliferate through the industry. But if they don't get value out of it right away, the industry is going to go, damn, we're not going to do that. We're going to still do this slow crawl forward versus this flip the tables.
No, for sure. So just focusing on the SDI discussion, yes, it's a more sophisticated, larger players. But outside of that scope, if a company, a brand new company that's just starting out would be purely digital, 100% transparent, what we found that is, you know, for any company of any size in any kind of maturity index, one of the biggest things that we had like putting on there was IoT sensors, IoT devices, the stuff that is just binary. Okay, what's either on or off, whether it's water detection or vibration or concrete maturity, all of those different data points kind of coming in, that regardless of the size of the company, you can implement that in any kind of scope. So if a brand new company's in there, we've been working with the carriers to actually leverage, okay, here's a before and after quote on your insurance, just based on the fact that you have this technology in place or you don't. And that's not even necessarily an underwriting move because we don't have the data of the past, but like, at least we're able to look at the previous history or market of losses down to the root cause of loss and say, okay, if 60% of the insurance company's book has been paid out for water damage claims, now this new company is using you know, something like a Wind or an Eddy solution that has water detection that automatically shuts off the valve that kind of feeds into this overarching system, then you're able to mitigate in some cases like 70 to 80% of that 60% loss from that carrier's book, right? So we're using that conversation to leverage the markets and saying, hey, take a leap of faith here because you know you've been in a hard market. Now's the time to kind of invest because you're going to have a more profitable look going forward, and it's going to be a win for your clients as well.
I appreciate that. The big GCs are going to struggle because there's just so much bureaucracy within them. You all know that. As much as what you said makes sense. Back to your point, the idea of getting a risk manager's input at the field and the value add. The field is busy doing the field thing. The risk manager is a necessary evil in their heads a lot of time, even if they tell you there's value in it. So I do see a mid-size or smaller company being the one able to disrupt an industry at this point with technology. And I was curious again, how we could, as an insurance group, could you help them leverage that? Is there value to them in doing it? That again, it's a long tail in the construction industry below the top 10%.
No, I think you're right. Like even working for a big company, I know how hard it is to turn on a dime like that when you're in a large cruise ship, right? So you can be a lot more agile and nimble sometimes as a smaller company. I know you worked with a lot of big companies in the past where you've seen how siloed they can be, right?
Yeah, I think with the large GCs, it's if you do want to implement tech, it's more focused on projects basis versus like implementing it across the whole company versus, like you said, the smaller size companies, you can implement the tech across the entire field. So all projects will be using it versus those large GCs, you kind of have to work with that one project manager on, you know, implementing it just for that one project and kind of going from there. So yeah, it's definitely an issue.
Those are the two tracks. It's like the project-centric approach or the enterprise-centric approach. And I think both need to go down fast, but obviously the smaller players can be more nimble on the enterprise-centric approach.
And I know I'm new to the conversation. I'm near and dear to the part of some of this from the insurance side, but I'm a huge trade advocate. And so I appreciate you, Nick, scrolling through some of the slides as I'm like watching as they come up. It's always based on the value, right? Where's the value add? You know, who's getting the value out of doing what? And I did also have I'm curious to hear the impression of this, and this gets into maybe the main topic in the main room, but the idea that even if the GCs benefit from some of this, will there actually be trickle down and the trades will benefit, right? It's a challenge in the space. Have we talked about that in you know, has that been talked about in this? Hey, it's great, the GC is going to see some benefit. Are they passing it to the trades, or can it be made transparent where the trade automatically gets it? Similar to what some of these pay solutions have done, where if you do the work, you get the money versus that gets held, right? The Textura type model of getting paid. Is there something similar for insurance? If the deduction was benefited by a trade contractor submitting information to the GC, can the trade get the benefit directly or at least transparently see the GC got a benefit, they should be getting a benefit.
Yeah, I think that, with this, there's going to be a flight to excellence within the entire industry, which is going to affect all of the GCs and all of the subs and trades as well. But to your point, like what benefit does the trade get? I think with that flight to excellence, there's going to be more transparency around who's working on some of the healthier projects going forward. Why are they healthier, and what kind of secret sauce do you have that's enabling you to move forward with that? But I mean, typically what we're seeing in the, if I'm mistaken, though, you can speak up, but the GCs fall under the contractor's risk umbrella. So it does kind of
yeah, so on the project side, when they're placing insurance, it would be the GC kind of buying that builder's risk or wrap up project that would incorporate all the subs and the trades. So if they are receiving that discount from incorporating tech, then the trades do kind of see the benefit of that reduced premium as well on a project side. But I guess across an enterprise solution, that would be a bit more difficult to implement if it's just the GC kind of incorporating that.
Satem, you're muted.
Say I'll put in for the guy who's on the software side, kind of just like selling software to all these GCs. I think one thing that I have noticed is that there's a bit of disillusionment by focusing on really like very high outcomes and goals when we talk about, what is the impact on their insurance costs going to be, versus if we focused on the true impact of technology adoption, IoT, whatever that is, every company should be adopting it, right? There's multiple levels of value. And if we can focus on educating, whether it's the specialty or the GC or the owner or the CM firm, that just adopting certain technology platforms is going to save your bottom line. It's going to protect your margins. It's going to cut down on the cost that you have, the time that you're running projects. You're going to have a more profitable job. That's where we see companies that are actually innovating. That's how they're evaluating value, understanding that by implementing it, they get to the steps of what we're talking about in this conversation. And that's truly where I believe the industry is today, is right there. We hear about kind of what is possible when we sit in this type of conversation, but there's levels of value that come before we even are able to get the amount of data to support a lot of the things that we're talking about here. And what we've seen successful is just educating them on that base level of values. How does it impact your job and your bottom line is how we're actually going to move adoption of technology in the industry forward, because it is how it impacts your project. And then eventually it's how it impacts your corporate bottom line.
I agree 100%. But if a trade is being transparent and the GC is gaining value and the trade isn't gaining value back, that's where I'll disagree.
I mean, that's the reality of the industry. But that specialty needs to now work with it. They need to pick better partners if that's the reality of what their situation is how the industry is going to go. You can't expect that from every GC. You got to find a better partner.
That's easy to say, but I think the idea was a common data platform we've been talking about. And if the insurance companies are going to play ball with that, then the GC should play ball with that and let the transparency trickle down. That's what I'm saying. I'm not saying
there should be some sort of pass through for that additional effort. Yeah, no, I'm totally with you on that.
If you want transparent data from the bottom up, bring it back down.
Establish the path through. It's hard to establish what that pass through should or could or would be.
It's easier to establish at the top than at the bottom. It's easier to establish at the top because the top is right in the contract, right? It's easier to establish at the owner that I want my insurance to be transparent. And I'm interested, Noma or Chris, hey, what if a GC said, an owner said, I want this to be completely transparent. If anybody wins, everybody wins. The data
it should be like that. I completely agree. Actually, I think you're both right. It should be transparent. It should trickle down. What we're trying to do is get everyone at the table, from the trades to the designers to the insurance companies, to say, okay, how are we going to use and leverage all the data that we have kind of coming in? And Saty, you're right. It's not just about the insurance. It's about the productivity, the efficiency, the contingencies that companies hold going forward.
100% agree. We only sell to the trade. So I was already a GC. I 100% agree. Where is the value? And if the insurance product is bringing a value to somebody, and the trade was part of the effort but doesn't get any of it, they have no incentive. So my other notes were like, what is the data you're looking for? And if it's coming through from the trade through the GC, can you bring it back through in that transparent way. I mean, that's a challenge. I get it. It's a big deal. Yeah. I'm an idealist. I don't care whether we ever sell our construction solution. I care that we make a difference if we're going to engage in this.
Yeah, yeah.
And so it's that full transparency of, hey, that sub used construction site or other, like, just to name a name of somebody that's not on here, they use this other product that brought us data, whatever it is that Chris and Thanoma, you say are valuable. This valuable data lowered the rate. Well, that sub should get a percentage in theory versus the sub that didn't use it. Is there a way to make that transparent from the top down? Because that's where the contract's getting written. The contract's not getting written at the sub. It's getting written at the owner and then the GC.
Yeah, it starts with the owner, because it's interesting. You're starting from the bottom here, but in a way, like, it also starts with the owner to kind of get that conversation going. So it does trickle down. And I'm not sure if you're familiar with like an IPD contract approach, but like they've tried to do that in the past. It doesn't work in the perfect way all the time, but that's because it's highly complex and it's highly challenging to get something like that to become that kind of utopia of moving forward. And a lot of times people are just drowning in data and they can't keep organized, they can't keep control. And that's part of the discussion here is like, okay, what do we need to streamline this going forward, and how can we make it work for everyone?
And I would be interested in that key data, because I think the insurance companies sit in an amazing spot, as do some other larger top end companies that have traditionally dealt with owners and GCs. You have a repository of data, and you've structured it. You've spent the time, because that's the business you're in, of structuring that data to see where there's value, where the GC may be structured, maybe not, the trade likely not as much. I'd be interested, what are those key data points? And if the insurance companies were willing to share those key data points, and then not like what they are by title, but then speak to an owner about, these are the key data points. We'll share, if everybody shares data back and forth, we'll share value back and forth. That to me would potentially offer everybody on the project value versus one contractor that has 100 trades working for them.
But we're in like Thanoma and I are in a good position as a broker, because we're not specifically tied to one carrier or one GC. Like, we kind of see the market, right? So we can use that to leverage, okay, what are you doing, but what's going to work for the entire market, and how we're going to change, so we can kind of knock down those silos. And it has been hard, because people kind of hold their stuff like this, you know, it's everyone kind of thinks of themselves as a unique kind of snowflake, but it really, there is consistency that can be shared across the board here.
I look forward to seeing that. I think if the KPIs were published, like I wrote it down 3 different times listening to everybody. What are the KPIs? Like, what are these KPIs that matter? You know, when I wrote contracts, I get it. It's liability and claims, but what are the KPIs you all use? And I think Chris has a good point, right? Like, we all think we're snowflakes. You guys have your secret sauce of KPIs, and it's probably exactly the same secret sauce as everybody else's. You may weight them differently, but it's probably the same points of reference.
Yeah, I guess from the standpoint there, with what are some of those things? I know, Thanoma, you broke it down into these buckets here, but if we talk about the contributions that a trade might need to make to this, are we kind of centering on the mitigation data piece, where it's like, okay, well, what IoT are they implementing on site, and that element of things?
Seems like a wedge to start with, right?
Yeah, I feel like that might be, if we're talking about that that area, you know, kind of identifying what, like you had said, Alec, are they using this software? Is it to that granular level where you have identified kind of key things that have had an impact on positive
I think
project completion? Or
from our perspective, like, it comes down to analyzing the claims data, the loss data, because we can literally see, okay, here's a project, here's a GC or a sub that's using products X, Y, and Z. First, we can analyze your loss profile and say, okay, you have really bad issues with water, with heat, with weather, with worker injury. That's when we kind of apply the IoT that kind of knocks those large pieces down in frequency and severity, and then we can kind of measure, okay, after year 1, here's what's still going through. That's on the claim side. The tricky part is what's self-retained and what doesn't go through the claims on the insurance side. So, like, what are the losses that you're facing today? What are the things that actually impacted the schedule that the insurance never really saw because it doesn't go, it's either self-retained or it doesn't go through a claim, you know? So I think we can start always with the losses and then move into the solutions and then see kind of like rinse and repeat for your to see, okay, how is this feedback loop improving and how can we kind of continuously improve things that still are affecting, you know, the losses. But then again, like I said, nobody really knows how to track losses that don't fall through claims and insurance. So, or nobody does a good job of it.
To Alex's point previously, we need that kind of incident data from the trades, but what's incentivizing them to give that, you know, for them to be transparent, they're kind of revealing, you know, things that they might not want to, especially to an insurer. So it's kind of, like you said, incentivizing them to give that data up and, you know, what value can they get from doing that other than, you know, now the insurer has a wider look into kind of their operations and their exposures and, you know, this could result in, you know, their rates going up. So it's kind of that balance between, you know, what value can they get from sharing that information versus, you know, what's their risk in doing that as well.
That's phenomenal. And I wrote that exactly down as I'm like, oh crap. Yeah, that's a really great point. Nobody's going to want to share the near misses. They don't even like to share them internally, much less above. But I think that's a really great point of conversation. We've had several companies we work with and in the industry that we associate with talk about how the trades, technology is making the trades a bit more of a commodity than a, you know, and that's not in disrespect to all the amazing work they do, but the technology makes some of this a commodity. And so it feels natural that some of this should get shared more transactionally. And we've even had some of our trades ask about that, you know, how can we share this data more transparently? And then the value of it for them is usually efficiency. It's not even what you're, you know, referencing where could they get an insurance gain from it? It's just efficiency. Hey, I'd rather not fill something out, press a button and get it done. And they'll
even
overshare. Right.
Having that culture and that mindset, just asking the question, how can we do better and what can we do is kind of creating this culture of, okay, we want to be safer, we want to be we want to be better trades, you know, so we can have better projects. There's a saying that, you know, we usually bring up, if you're going to be naked, you have to be buff, right? Because it's a double-edged sword. If you're going to be transparent about everything, but like you're still not improving, then you're going to reap negative benefits from that, right? So it's not always going to be a positive gain with transparency. It's up to the company and the culture.
I mean, and remember I said I'm an idealist, so some of my ideas might sound pretty wacky, but I know there's companies, obviously one very notable, Oracle has built a building, you know, for the purpose of exploring these things. Has anybody explored the concept of, you know, basically testing this concept? Let's build a fully transparent building data-wise. Let's start from zero up. And, you know, I don't know if Oracle needs to build a second building out there and wherever that building one is. You know, I follow.
Illinois,
I see it
it's
on
right
LinkedIn.
down the street.
Is it? There you go. Do they need to build another one? I mean, you know, I almost think we have to explore this. I think one of the recent conferences someone spoke about, they retooled everything they were doing to revolve around the model, the mechanical contractor, and it was phenomenal to listen to, but it was a 10-year adventure. And they're one of the top mechanical companies in the country. It took 10 years, right, to evolve all their processes. If we continue on our path, it will continue to do that because we're always going to be in silos, right? And Saddam, to your point, right, where those, I agree with you 100%. And that just reinforces the silos is the problem. So has anybody explored, let's take a few of these $1 million that we, you know, think we can save and actually try something. And Oracle, you know, Procore, Autodesk, somebody, let's go sponsor a building build with as much of the technology that let's let the insurance companies be the neutral party, if you will. You're neutral in a sense. I'm cynical too. You know, it's money, but you're neutral in the sense of you don't care which technology. It's the technology that's already proven value. It has nothing to do with the best technology. It's the technology that's proven value. So let's build a building. Let's install that tech. Let's prove that there was or wasn't value in it. Have we gone as far as to go to, I know there's lots of voices within this organization, even to DC, and say, hey, can we get a grant for, $2 million and build a little Starbucks in the corner next to the Oracle lab, with this idea?
I think there are examples of companies doing that. If we actually partnered with a company called Ladium Technologies that builds IoT sensors on projects, and they've done a few kind of pilot projects like that. I don't know if it's, like you say, like 100% transparent, fully digitized, all that kind of stuff. I'm not sure about that, but there are good news stories coming out from some of these projects at least. So.
Those would be great to hear, and because I believe you, somebody must be doing this.
Yeah.
The industry gets inundated with marketing material from the companies that are doing a lot of marketing. And my guess is that company's not doing a lot of marketing of that. They're doing their own thing to do their own thing. And I don't see it. Can we bubble some of that up?
Yeah, I'd be happy to share that.
Yeah, that'd be amazing.
So, yeah.
I see Bircham all the time, right? He does a good job of, the Oracle lab. That's why I poke it as an example. But I think the industry needs to see the value proven. Right? I've been in it. I'm 50. I've been in this industry since I was 25. The industry needs to see it proven. Yeah. And somebody has to take that risk to prove it, or we'll just crawl along. And again, I'm willing to throw some ideas on the wall. I don't have the money to throw behind them. So, unfortunately yet, when I do, I'm going to be having a lot of fun with this. But today, I do have a lot of energy and passion to lend to it. And I have seen lots of things thought about on whiteboards. And I'm curious if we can play some out in person.
Yeah, I agree. I think, everything to do with the Oracle Innovation Lab and what Bertrand kind of puts out there, he's a genius at it, and he does a really good job of sending the message out there. And I find what we found has been actually challenging is actually just getting people convinced to tell our story around kind of taking that first step to do this, right? There's a lot of education involved. There's a lot of, just like, showing them the path forward of how they could even take step one here, which companies are really open and willing to do that. But there's a lot of steps going forward, to go down that approach. A lot of people to come together at the table. So we've knocked out a lot of dominoes in the past, half a decade or so. I think hopefully we get to that point where we're seeing exactly what you're talking about.
Yeah, and trust is part of it. I mean, again, I'm not naive.
Yeah,
I've been around a long time. I'm not naive. Subs are not going to want to share with GCs. GCs don't want to share with owners, and owners don't want to share with you all. And everybody wants to hide their sins. I do know. Yeah.
Cool. Very good discussion here. A lot, obviously not all tech discussion. We ran into the same thing with 3.3, and we're at that conference where it was like, okay, we're really getting down to the heart of the matter here with incentives and everything to do with that. But I want to kind of look back at or raise the question, right? With the way that some of these things are being considered, I know some of it is to do, and I'm not the most educated in this topic as well, but I know some of it is to do, like we're talking about measuring project performance, relative to a specific project, but then also kind of identifying rates per the contractor themselves. So how do we kind of reconcile those two things between when we are evaluating a project, as a project, versus kind of a contractor's general risk profile over a life cycle?
I think everyone does it differently, from the insurance companies to the GCs themselves. Even subs might have a hand in that, but I think it was Alec or Dixon that brought up the point, like, what is the best practice that we can leverage that creates the consistency across the whole market here, that we can use kind of one consistent data dictionary or data definition kind of moving forward, that creates some kind of ISO consistency across the whole board with what is a healthy project. And we're constantly being barraged by things that are new and innovative by, so ESG, for instance, taking into consider all of those things around, environmental, society, and government. Okay, this is a new kind of metric that they're using in Europe to say, okay, here's a healthy project. You can't even procure a project based on certain, carbon emissions and things like that going forward. So I think it's ever changing, but somehow trying to get to a consistent approach to figure that out. What is a healthy project will be the first start.
But with the kind of questions on here, so have we spoken really to the demand for data question? I know we've kind of circled a lot around, what is it that we would want and what's being considered today. But I guess what's kind of this ultimate outcome that we're driving toward, or what is that demand for data from the insurance or the surety providers?
So, I mean, the data that they're typically wanting to see is, how could we prove this out actuarially? What change can we see? But typically that requires, like I said, 10 years worth of data from the past, where we're trying to get to a point where data coming in is changing from using data of the past to underwrite to what we're calling edge underwriting, data now, data of the future. So that can kind of get to a little bit of a predictive approach where we're saying, okay, here's the data that we have because we have X, Y, and Z tech implemented. Here's our history with it, but also we can kind of predict the lower frequency and severity of issues from an insurance perspective, right? So from that point, edge underwriting is a little bit of a leap of faith at this point in time, but at least, Aon's been able to kind of get a few markets on side with saying, okay, here's at least a before quote and an after quote based on the use of your technology that we're seeing here. And that translates to reduced premiums and across multiple different lines.
And that's kind of what oh, sorry, go ahead.
No, I was just going to say, yeah, I think even the markets are kind of understanding that they can't just underwrite risk based on just past claims. It is ultimately about what's currently happening, the work in progress, the breakdown of exposures and operations. And if we just look solely on past claims, whether frequency or severity, that doesn't truly paint the picture of what's happening. So like Chris said, moving towards that edge underwriting is going to kind of take a lot of work and transparency and data coming in from the client side and the markets to kind of come to that middle ground of how can they make a profit as well. So that's a difficult thing that we're gonna have to face.
Maybe there is even a misconception around like the sophistication of the data that currently is available in the market. I think there's still a long way to go compared to what has traditionally been done. For example, like what is the profile of a hospital on the West Coast? Like what exposures, what limits, what subs, what issues, what incidences can go wrong, specifically for that asset in that location at that size, things like that.
I'm curious to ask a question, partially selfishly, partially just having lived it for so long. If a GC and maybe even a trade were to start sharing when they're tracking a claim, been at a GC, we track a claim before we submit it, right? Mm-hmm. And we only send notice per contract when we're supposed to send notice, usually not before, right? Back to that whole problem of data. It's suddenly at the inception of there's an issue. I think almost everybody's software these days has a way to track when an issue starts. There's an issue started. Would that open Pandora's box to like insurance companies' rates would start going up, or would it give a level of comfort to an insurance company that I'm actually seeing this?
I think we have to leverage the fact that they're actually going to learn more about any particular risk or incident when they see things coming up earlier, because at the end of the day, if they're able to identify that and mitigate the problem or teach people how to mitigate the problem through a feedback loop, do it early, it does impact the insurance company's bottom line, right? Because they're paying the claims out in the end. So it's in the long run, it is a win on both sides with that situation. But I can see, with human behavior being an aspect of all things that we do. Your point. So
I'm curious. I mean, we are able, and we've helped some of our contractors track claims early at a pretty granular level, but I'm sure they're not sharing that above, right? I understand all the many reasons why, but I'm curious where that level of comfort will start to come. And I do think there's people working on that one as well in different ways of, you know, the claim doesn't have to be a claim if you can start early.
Right. Yeah, exactly.
Yeah, it's an interesting point. And I know, what was it, Nathan used the analogy of the progressive, you know, snapshot. You plug that thing into your car and
Exactly.
you know, you're kind of undertaking the risk that it could negatively affect your rates, you know, if you are reckless or whatever. But it's like it's a very, it almost simplifies things a little bit too much, just because we are dealing with that, like, you know, triple layer of, you know, what is the incentive that is ultimately being passed on all the way down the chain.
There's a short-term pain, but a long-term benefit, I think, in that scenario. And that kind of going back to the SDI model, like it puts the contractor or the trade in the driver's seat. And how are you going to manage your risk going forward with that?
Nick, thank you for bringing that analogy back up. Yeah, I love when he said that. It is that, right? Everybody understands that, like, plug-in progressive app thing, that you hope to gain value if you're good, right? And so the trade always goes in thinking they're going to be good, right? The bad ones would never plug it in because they know they're bad. The good ones always hope they're going to be good. It would be interesting for that perception. That's a good analogy for the industry, perception-wise, because a lot of them have probably done that in their vehicles or even across their fleets.
Yeah, and I do think perception-wise too, Chris, you made a good point where it's like, ultimately the fact that you're learning more, even if it is for a you know, a negative hit or whatever, a claim that they have to make, the fact that you're learning more allows you to greater adjust those rates and dial in on exactly what is, you know, this big question of what is project health, what is you know, a safe contractor, or however we want to define it. So it's, it's that short term versus
and
long-term
Alec,
question.
I do think that major carriers are going down the right path with understanding that now. And we're seeing the right stories going to come into place. So I think I'd like to remain hopeful on the more positive side of that.
Well, and I think the typical trade contractor would be happy to have the information early too. They're, you know, to that even, there's another layer, right? Their projects aren't sharing it internally, right? They're not going to share up to the office until they have to. The more progressive contractors have moved past that, but there's still a large part of the industry that is keeping the problem out on site until they can't. So plugging in a progressive app would make a lot of offices happy. You know, and that then in turn, I could see them sharing that data much more quickly, that they've seen, yeah, we're going to have claims, we always will, but we got better on 80% of what we were doing versus what we were. And hey, let's share that if there's some value in it. I love that.
So as always, it's one of those things where you go into something trying to answer one question, you come out with a million other questions. But I do think, you know, I hope that this was a good and productive conversation for everybody involved. I think I definitely appreciated hearing, especially because, like I said, I'm coming from the perspective of being one of those IoT providers. We, you know, have solutions where there are safety elements built into those tools. There are different diagnostics and things that you may be able to get out of these things to contribute to project performance, work in progress, all of those elements, but understanding kind of the overlying influences and really who all is concerned about this data is obviously important for us. And similar to Alec, it's like we have, as a company, at least Milwaukee has a greater focus on the trade side. So that's where a lot of our lens comes in to start. But definitely appreciate seeing each level of perspective, you know, from that GC side and the owner side. So thank you everyone for coming on. Chris, Thanoba, thank you for joining. From Aon, I think definitely having the back office side and seeing, you know, the ways that you guys are really trying to push things forward is obviously really, really cool. So thank you for joining. Thank you, everyone. Anyone, I think we got a few more minutes, but Dixon, you came off mute. Anything to say?
Yeah, no, I appreciate it very much. And Alec, to your comment, there's a research going on at the University of Texas at Austin by the Construction Industry Institute, which is part of CURT. CURT is also a member of the Construction Progress Coalition. And they're looking at exactly that. They're calling it a neighborhood where there is true transparency across all the stakeholders for mutual benefit. And you're right, it is a huge change in the way business is done. But they're researching it, they're looking at it, and they got some big players there. Microsoft is part of it, Exxon. So if the big boys, implement, it's easier for simple folks to look at and to adopt. So they're trying it, but you're right. You said it quite succinctly. It's a real bureaucratic challenge to change.
Yeah, absolutely. I'll say this, and this is not, I'm not salesy here. We'll give our software away to the causes that are trying stuff. I'm an idealist. We're not in it for the profit on that. We're not in it for the customer base. So if there's helpful in software, we're happy to give it away.
Yep.
Sweet. Well, I think we're all getting called back, so we can head back
Cool.
to that main breakout room, but thanks everyone.